Hi, everybody, it's FIBO Group, and you are watching to the Market Watch review. Only China and Hong Kong were among the top markets in Asia-Pacific that resisted lower. Europe's Stoxx 600 has fallen by more than 0.5%, mainly due to real estate and healthcare. This is the fourth consecutive loss over 5 sessions, and the benchmark has fallen to its lowest level since March 18th. The U.S. futures are flattish. Yesterday's session saw a drop in NASDAQ by over 2%. Higher rates continue to support the greenback. The Australian and New Zealand dollar are resisting today. The Canadian dollar and Swiss franc are the weakest. Gold is solid and close to yesterday's $1,953.50 close. After falling to $92.60 yesterday, its lowest level since March 17th, June WTI is now rebounding to make up the majority of yesterday's almost 4% decline. Asian Pacific market. Beijing will continue to pursue its zero-COVID policy despite the economic consequences. This disruption is having an impact on oil and metal prices. Japan's Finance Minister Suzuki raised his concerns about the yen's weakness and stated that officials are closely monitoring the foreign currency market. The dollar saw a slight pullback, but it remains steady, just short of its 2015 high of JPY 125.85. Today's move has seen the greenback extend its rally for the 8th straight session. The Australian dollar is finding support at $0.7400 and has posted minor gains since Tuesday. Market of Europe. Mixed UK employment data. After a revised 58,000 decrease in February, March's jobless claims dropped by 47,000. The ILO measure for unemployment fell to 3.8% from 3.9%. The average weekly earnings increased as expected by 5.4% from 4.8% during the 3 months measure that includes bonus payments. The ZEW survey of German investors was not as good as Bloomberg's median guesstimates. From minus 31.4, the assessment of the current state of affairs deteriorated by minus 30.8. It is the lowest since May last year. The euro is again under pressure. It fell below $1.0860. Market of America. Today, the U.S. reports March CPI. Bloomberg's poll of 48 respondents found that no one expects the year-over-year pace will slow. The Bank of Canada had split the swaps market between 50 and 75 basis points. The market has returned to 50 basis points, but cooler heads prevail. It is expected that the Bank of Canada will also begin its balance sheet roll-off. Despite the widely anticipated rise, the Canadian dollar continues to lose. The US dollar is continuing to rebound from its low of CAD 1.24 last week. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.